Today's training video, I'm going to walk through how to use the take profit number, what that is, and why it makes sense. So anyways, the take profit number can be found in the verdict section. The take profit number is purely based on where the stock can mathematically reach a high of. So 489.88 is the statistical high we can reach based on previous levels we've been to, as well as the momentum the stock is currently having. So again, we can see and have a good idea of holding this stock for the longer term swing trade right here, about a 43-day 3-day out type of hold, where we can reach take profit wise. So this is a very reliable number in those regards. However, as always, when you are trading a stock, specifically swing trading a stock, you want to have an idea of your take profit, but also you want to kind of follow up with a stop loss. And so to help you understand a stop loss better, what I did is I actually am including at the end of this video a clip from a coaching program video that I have that people have paid over $1,500 to get access to this program. And so it's going to be awesome as you get access to watch this video to learn how to better use a stop loss. All right, guys, I hope you enjoy this and learn how to actually take profit and have consistency with it. So here are our rules for the stop loss. So setting a stop loss is the most important part of managing your swing trade because it protects you from losses and helps you follow the trend in order to maximize your winners. So set a stop loss as soon as you entered the position based on the game plan you created before you entered the stock. This typically means a 3% default stop loss or preferably a stop based on the stock's volatility. Now again, if you're like, how do I develop a stock game plan? That is coming in one of the next lessons, so stay tuned. And also I'll show you how to calculate the stop loss here. You can only move the stop loss up, never down. So never ever move your stop loss down. A stop loss can only move up. And you update the stop loss based on this set of criteria. So VIX is known as the volatility index. That shows how much the market is moving and how volatile the market is. So for instance, if I go here to VIX, you'll see that it's the volatility index. And so again, it's a non-tradable asset, so it has no volume. But anyways, you can see here when it breaks above 20/22.25, the market starts to go crazy. So that's when the market starts moving. Every stock starts moving faster than it typically would. And so again, that's why it's set up like this. If VIX is above 20, you kind of want to monitor your stop loss daily. That can only be like 5 minutes a day where you check the stock and you're like, did the stock move higher? Can I move my stop loss up a bit? That's kind of the goal there. Now, if the stock or if VIX is below 20, that means the market is going to be moving slower and you only really need to check on your stock weekly or on your stop weekly. So that's kind of how that goes. And now let me quickly explain why a stop loss is so important. So again, stop losses, as most people know them, protect you from the downside. But let me also explain. So let's say you enter a stock right here and you set a stop loss here. So right, you enter here, stop loss here. Okay, so now we protect our downside if it goes against us. But again, let's say that this stop loss right here, the distance between where I bought in and the stop loss is 3%, right? Let's see if I can draw that correctly. 3%. So this means that there's a 3% stop, which means if it goes against me right now, I will lose 3%. But as it starts to move higher, let's say it moves up 5%. Well, guess what? That week, I need to update this stop loss and bring it down from here. I need to bring it down 3%. So my new stop loss is going to be right here. Now, why does this help me? One, because now I'm up money. I'm up, if it hits my stop loss, I'm up a 2% profit. But what does that mean? It means, one, I protected my downside risk, right? I protected my downside position. But not only that, even though I'm up money, I'm not selling, right? I'm allowing the stock to have room to continue moving higher. And I'm allowing it to continue moving higher while also still locking in my profit. So as it moves higher and it reaches the highest point, I take that highest point it reached and I create my new stop loss. So now my new stop loss is here. And as it goes over time, my stop loss moves higher and higher and higher until eventually, let's say my stop loss is here, based on whatever the percentage we discuss, and then it comes down and it hits that. Okay, guess what? Instead of getting out, let's say my take profit would have been here. Well, guess what? I used my stop loss to follow up safely with the stock that when it got here, I actually made this much more profit because I let my stop loss follow my trade. So that's why we update our stop loss and allow our stop loss to take us out of the trade. We always have a take profit goal for our trades, but the stop loss is what allows us to follow that trend further and maximize our gains. So That is the idea behind it. Now, how do we calculate the stop loss? So the ideal calculation is based on the volatility of the stock, right? Like we can say a 3% default stop loss. Okay, that's cool in theory, but Let's say you're trading Tesla, where it moves 10% in a single day. A 3% stop loss will get you snapped out of that stock. So again, the perfect stop loss, the ideal stop loss, is based on the volatility of that stock. So what we do is the actual method is the expected move of that stock divided by the 200-day moving average price divided by 2. That will get you the percentage stop loss you want to be at. Now again, you're like, okay, what is all that? That's just the mathy side. The easy method is this. I'll show you in a upcoming video how to install the trending band for yourself, so don't worry about that, just stay tuned. But again, you'll add the trending band to your chart, and your stop loss, for one, you can either come into the settings, because I have it ingrained here, where you can actually go to style and you can show your stop loss and show your take profit goal, so you can see where it's supposed to be. But again, just by doing it yourself, what your stop loss percentage is on any stock is the distance from the middle line of this band to either the top or the bottom. It's both the same distance. So a 3.3% should be kind of like what the stop goal is, and then you're gonna have that. So again, you're gonna have about a 3% stop loss, and then you're going to divide that by 2, so that gets you to about a 1.5 stop loss. Now, there is a caveat I have to say that I realized I did not include here. So again, you're going to calculate the stop loss, but again, let's put the caveat here. Max stop loss of 3% if the calculation is less than 3%. So basically, you do the calculation to determine the volatility of it, which is basically this band. So let me show you another example. Let's do MSFT or something that's moving a lot more. You can see here the trending band. I can do from here to here. That's a 4.45. Let's do a faster stock. That's going to be just a 3% stop loss to Tesla. Tesla. Right here. So the Tesla obviously moves faster. So let's see the percentage. Yeah, right here. So we have about a 7.67%. So that means we're going to have a stop loss of about a 3.5% stop loss at the moment. Now, again, this will adjust based on the volatility of the stock. When the stock is moving slower, this band will be smaller. Thus, you'll be setting a smaller stop loss. But when it's moving faster, you'll have a wider stop loss range. You can see here the wider stop loss range. That's a 22% difference. So divide that by 2. So you'll have a 11% stop loss when the market is super volatile here. So that is how you set the stop loss for those specific periods.